What's up, YouTube? It's Kenny. This is going to be probably my second or third video about the stock market. And in this one, I want to take the opportunity to talk a little bit about my strategies and how I approach the stock market. And also talk about what I made money on this last week. And, moving forward, I'm considering starting another channel so that I can change it to a different name. But for right now, I'm going to continue here. And any of you guys that hit that subscribe button, I will announce it if I change over to another channel so that you can transition over to that. Do hit the subscribe button. Like the video. Help me start building something over here. And I'm going to talk about the stocks that I made money on this week. And I'm also, again, going to talk about my strategies and how I approach the stock market. Alright, so I'm a smart dude. Alright, I got a Texas accent, but I've got an IQ pushing 150. And so my brain is wired to be able to do, strategy, to strategize, to look at the big picture and find these ways to extract profits out of the stock market, okay? I plan to do things a little bit differently. At least at this point, this is my plan. I plan to do things a little bit differently than all of these other channels on YouTube, alright? At least as of right now, I'm not starting no Patreon, I'm not starting no Discord, I'm not going to make you pay extra to see the moves that I'm making and stuff. I'm going to put it all here on the channel. Now, I may at some point start a Patreon so that maybe you guys can just support me because you like the content. But as of right, but I'm not going to give you anything extra for it. You know what I mean? I'm not going to put myself through a whole bunch of extra work, making extra videos, making things exclusive so that you have to pay if you want to see what I'm doing and stuff. Everything that I do is going to be right here. I'm going to talk about it. All right. So hopefully that'll be something that may make you want to give me a subscribe. So let's talk about it. How do I invest? I use my brain and my instincts to invest, all right? Now, a lot of what I do, at least right now, okay, is based on hype, all right? It's based on hype. I have some, we'll talk about it another time, the things that I use for more long-term investing. But I use about 50% of my money, at least right now, for long-term investing, and about 50% of my money, I do these little hype plays and stuff.
Crossing border, entering Virginia.
Most of the plays that I do are based on research that I do primarily on YouTube. All right? There's a wealth of information on YouTube. There are many good channels. There are a bunch of bullshit channels, but there are many good channels on YouTube that you can use to catch these stocks when the hype starts, all right? And that's what I'm doing to try to build my account right now. So I've been doing this 5 months. That's it, 5 months, okay? I've been doing research for longer than that. I spent a couple of months doing a lot of research and coming up with what I thought was a viable strategy. But about 5 months ago, I started trading these stocks. And as of right now, I'm up over 60%, all right? And that's including, like, some losses that I made at the beginning. I apologize for the sun. It's the time of day. But that's including some losses that I made in the beginning. In the beginning, I made some bad decisions in the penny stocks and stuff like that, which I don't mess with any longer. And my account was down, and I've been able to claw back and claw my way back and go up, and now my account is up over 60%. In these last 5 months, I've only put $4,000 into a Roth IRA, and my account is now worth like $6,200 something. So I'm well over the 50% mark, and over the 60% mark at this point. When I say that I've made 11, 12, $1,300, whatever it is, or I'm sorry, $2,200, whatever it is. I mean that I sold, okay? Not that I've invested long term into a bunch of stuff that's gone up and I haven't sold it. I'm a firm believer in realizing profits, taking profits, securing profits. If I make $500 on a stock and I don't sell it, I haven't made $500. So maybe not always, but most of the time when you hear me say I made $200, I made $300, whatever it is, that means that I bought a stock and I sold that stock. I want those profits to become permanent. Nothing can take that profit away from me once I sell it. No drop in share price, whatever, is going to take those profits away from me. And I want you to internalize that. And I want you to also understand that there are taxes associated with that. I trade inside of a Roth IRA. Okay, that means that I can't touch my gains or my winnings until I retire. And because I do that, I don't have to pay taxes. So if I move in and out of a stock in a 3-day period, there's no taxes associated with that. If you do that inside of a cash account, your taxes will be higher if you don't hold that stock for a year. And I view that as a disadvantage. I feel like if you have pressure to hold that stock for a year, the stock goes up. In a year, you may lose that profit because the hype, a lot of times moves these stocks. So I want you to consider using a Roth IRA to do your trading if you're going to follow this channel, okay? Or be prepared to pay the taxes, to pay the tax man if you decide to follow my moves. I am not a financial advisor. I'm just a truck driver, a smart guy who's decided to try to build some wealth in the stock market. So if you choose to, adopt my strategy and maybe try to follow some of my moves and stuff like that, that's on you. That's on you, all right? I've been successful so far, but that does not mean that I will always be successful going into the future. I've made good choices and bad choices. So that's my disclaimer, all right? So I use my heart, my mind and my instincts. My mind and my heart, all right? What does that mean, okay? That means that I watch a bunch of videos. I'm subscribed to a whole lot of YouTube channels, and I watch the videos that have all these fundamentals, the numbers, the, EPS, the forward PEs, and the profits and losses, and all this stuff about the companies, okay? And that's the part where I'm using my brain, all right? I'm thinking, is this company stable, and do they look like they're going to become profitable, or are they profitable? And then I use my instincts as well. Use my instincts. Do I feel like this stock is going to pop? Do I feel like this stock is going to be strong moving toward the future? And these are the things that we use, all right? Now, what I don't want to be using is my emotions. I don't want to be emotional. I don't want to fall in love with these stocks, okay? I want to be Spock, okay? If the stock goes down and I buy into it and then it goes up, I'm not trying to hold on to it. I'm trying to sell it and get those profits, because I'm in this to get that money, all right? So I have some long-term stuff, okay? About 50% of my money is spread across a couple of ETFs to get some diversification and to protect. Well, I say protect. They're both pretty risky ETFs, and we'll talk about that at another time. All right, and we'll talk more about my strategy and stuff going forward. But I want to talk about what I made money on this last week with you guys. So first of all, we're going to talk about the big one. Everybody knows about Tesla. So here's how it went down. I've I've been in and out of Tesla a few times over the last 5 months, and I've made money each time. But I'm subscribed to a YouTube channel called Tesla Daily, and there's several others that talk about Tesla that I'm subscribed to. And so the news came out about the S&P 500 inclusion, right? And on Tesla Daily, he talked about a lot of numbers. So, I'm like using my brain at this point, okay? So I jumped on board with one share at $405, all right? The Tesla Daily video, when he went into the numbers, okay? Let's talk about what I saw, okay? What I saw was that it's not just the hype, okay? The S&P 500 inclusion, what that's going to cause, and what I saw that was going to cause, okay, is that all of these mutual funds and ETFs that track the S&P 500, they track that index, okay? The goal of those funds is to replicate the returns of the S&P 500, okay? The only way for them to do that is to buy Tesla once it's included into the S&P 500. If they want to replicate the profits or losses of the S&P 500, they have to be invested into those stocks. So the numbers that Tesla Daily put out, I refreshed my memory, put out another one this morning. He said it's like 115 million shares, somewhere around there, that these funds are going to have to buy in order to be weighted correctly to replicate the S&P 500. Well, that's like 15% of the shares that are available. So when that happens, and I suspect that they're already slowly starting to build positions just based on the price action over the last week, once they do that, I mean, all of us who play around in Tesla and go in and out of it, we're not going away. It's not like the people are going to just stop buying Tesla shares and selling Tesla shares because these funds have taken a bunch of shares off the market. And it's obvious to me, using my brain, that that's going to force the share price to go up. There's going to be, because those are long-term holds. They will buy that 15% of the float and hold on to it and not let go of it. And so that reduces the number of shares on the market for the rest of us retail investors, to play around in. And naturally, when a bunch of shares are bought, the stock goes up. When a bunch of shares are sold, the stock goes down. So when they buy all these stocks, the stock price is going to go up. I mean, it's just basic math and logic. Maybe not basic math, but it's math and logic, So I saw this and I jumped in at 405. Next day or a couple days later, she moving hard, man. So I bought another share at 480. So at this point, I got $885 into it, just in 2 shares. She's still moving up. She closed yesterday at 575. And I'm up close to $300. 260, 270. Close to $300 that I'm up on just 2 shares. And that's using my brain, okay? Now, I'll be using my instincts to decide when and if I want to sell that. My instincts, maybe my brain as well, will tell me that, okay, I'm satisfied with this amount of profit and I will sell. Maybe I won't. Maybe I'll decide to just hold those 2 shares for years. But the way that my brain works and the way that my instincts work, I probably will end up selling it. Because I like to realize the profits, okay? So that's the one stock we're going to talk about today that I'm going to say I've made 300, close to 300 on, that I haven't actually sold yet, okay? So really I'm just up almost 300. And I got to say, I don't think she ever goes down for extended period back under $500. I just don't. I mean, I'm sorry, back under $450. I just don't think that's going to happen. You know, it may pull back after the inclusion a little bit, but I just don't see it. I don't see me ever going back down to my cost basis on it. So what else did I make money on this week? Arrival, the SPAC, ticker symbol CIIC. This one for me, using my brain, is not a very great long-term play, or at least mid-term play. Okay, they're several years away from, you know, getting vehicles on any scale to the market, much less making any profits. Okay, they do have a UPS contract over there, and that is something, you know what I mean? But they're not, as far as I understand it, they're not yet producing vehicles, and they won't start delivering on those vehicles for at least a year or so. So to me, that's not like a really great thing to stay in for a long period of time. For me, you know, it could and probably will blow up in 5 years, you know what I mean? But I'm not looking that far out right now because my account is still small, and I'm not looking that far out. So this one for me was a hype play. I got in, I caught it pretty early. You know, I stay up on my YouTube research and stuff, and I caught it pretty early, was able to get in about 17. I think I only bought 50 shares, something like that, 40, 50 shares, okay? I try to, you know, base the amount of money that I dump into a stock on what I think about it over the longer term. We'll talk about that a little bit later. But, so I bought some at 17. I can't remember what I sold it at. Might have been, I don't know, I made about $200, $225, something like that in profit on it. All right, I bought it one day, sold it the next day. I like to hold overnight because of the way that my account works. I have to use settled funds. I can kind of trade with unsettled funds with my Fidelity IRA, my Roth IRA, but the funds have to be settled before the next move happens. That way, you know, the funds are actually physically available when it's time for that trade to settle. So I try to do it like buy one day, sell the next day. That way, it's complicated. That way the funds are settled at the times they need to be settled. All right. So I bought one day, sold the next day with CIIC for, you know, a couple $100 profit. The other one that I made money on this last week, NNDM, Nano Dimensions, NNDM. This one is a little bit different, okay? This one I do think is a good long-term play. But I was looking for a short-term play. And there was a lot of hype surrounding it because ARK Invest has been buying a whole bunch of these shares of this company, and it's a low price. You know, it's technically a penny stock. So I felt comfortable because I think it's a good long-term play. All right, I felt comfortable buying more shares of it, and also because it was cheaper. So I watched the stock and waited, and I caught it and got in at $5 a share. I bought 200 shares at $5 a share. Okay. Now here's my thinking behind buying that many shares. I say that many. My account's fairly small, so to me, $1,000 is quite a bit. So here's my thought process on when I'm doing these short-term plays. It's better to do short-term plays into stocks that you believe in over the long term. If you're just doing a hype play, that's one thing, like what I did with CIIC. But it's better to do it into stocks that you believe in over the long term, and here's why. If I bought 200 shares of Nano Dimensions and that share went down for a few weeks, I wouldn't have a problem holding that for a couple months or a year even if I needed to, all right, if something bad happened. You got unlucky and a bad piece of news came out and dropped down, and you know, when I bought, there had just been news of an offering and it came way down, and I bought it at $5, all right? And I could have held it longer and made more money, especially if I'd have held it for a year or so. But my goal was to push my account up over that 60% mark. I wanted to be up over 60% on my total account value. And so I bought it at 5, watched it the next day, waited for it to pop a little bit, sold it at $5.70, made $140, pushed my account up over 60%. Now, to some of you guys, these may seem like small profits, all right? And they are, in the grand scheme of things, fairly small profits. But these little small profits begin to add up. Sorry, I'm passing a way station. They're flagging me through with my electronic devices here. But these small profits add up, okay? Now, since I'm trading in a Roth IRA, I don't have to worry about the taxes that are associated with moving in and out of a stock within a couple of days, you know, within less than a year. You know, there's no taxes in this Roth IRA. So if you're going to follow this channel, you may think about starting to invest in a Roth IRA. I do have another account that's a cash account, but I only buy things, and it's fairly new, but I only buy things in there that I'm looking at over the long term. I've got some SBE in there, and I also bought, what else was it that I bought? That's some NNDM, I believe I bought and put in there the other day. So, you know, a cash account is good if you're going to go long term. You're looking 5 years or more out. You know what I mean? That way, when you don't pay taxes on it until you cash it out. So if you're just going to let it sit there, you don't have to worry about taxes for a while, all right? But with the Roth IRA, that's where I want to make my moves in and out, because I don't have to pay any taxes associated with that. So that's another part of my strategy, okay? Now, be aware that if you're trading inside of a Roth IRA, you can't take your gains until you retire. You know, you're not going to take your profits until you retire. You can always take your initial investment back out like a savings account. It doesn't cost you anything. But you can't take those gains out without penalties and all that stuff. So that's something to keep in mind. But I think that the Roth IRA is a really good way to trade to avoid all of those capital gains taxes. Because, you know, you make $100 in a cash account, you got to pay, you know, you didn't hold that for a year, you got to pay 25%. You only got $75, you know, so it kind of defeats the purpose, in my opinion, unless you're making big gains. But in a Roth IRA, I can take these smaller gains and let them keep adding to my numbers to get my percentage up. And I've been really successful at it so far. Will I be successful at it into the future? I don't know. I don't have a crystal ball. The market could start acting differently and I not adapt correctly and lose some money and, you know, take my number down lower than 60%, but I don't anticipate it ever dropping back down below my initial investment. I'm not saying that can't happen, but, you know, I'm pretty careful. So I'm going to end this video here. Those are the 3 stocks that I made money on this week: Tesla, Arrival, CIIC, and Nano Dimensions, NNDM. And, you know, when I eyeball some more stuff and kind of decide on some moves, maybe for this coming week, I'll make another video. We'll talk about a plan that I'm going to try to execute over this next week.